Welcome, future Treasury leaders. Today, we're exploring the dual engine that powers modern corporate finance, technical competencies, and domain expertise. To thrive today, you must master both the financial science of Treasury and the digital architecture that enables it. Let's get started. Let's begin by defining the new paradigm of corporate Treasury. What does it take to lead in this space today? It requires a hybrid skill set. We are talking about a seamless blend of deep financial domain expertise and advanced technical competencies. For decades, the basics of Treasury relied entirely on functional finance skills. However, recent surveys reveal a decisive shift. Organizations are rapidly adopting a 50-50 split between functional and technology skills. Why is this happening? Because the sheer velocity of global cash, market volatility, and regulatory demands mean that spreadsheets are no longer sufficient. How do we adapt? We must aggressively cross-skill our teams. In our deep dive, we recognize that this hybrid capability is the only way to elevate Treasury from a reactive, transactional department into a proactive, strategic control tower that adds quantitative value to the entire enterprise. Take a look at this structural breakdown on your screen. At the top, we have the modern treasurer. Notice how the role splits equally into two main branches, domain expertise on the left and technical competencies on the right. Under domain expertise, we see the traditional pillars, managing liquidity, financial risk, and funding. But look at the right side. This is the new frontier. Technical competencies now require fluency in APIs, data analytics, and AI automation. To be an effective leader, you cannot choose just one side of this tree. You must master the entire ecosystem. Now let's drill down into our first core area of domain expertise, cash and liquidity management. What is it? It is the fundamental responsibility of ensuring the firm can meet its financial obligations by having cash in the right currency, exactly when and where it is needed. The basics revolve around managing the timing gap. You see, a business pays its suppliers to build a product long before the end customer actually pays for it. Why is mastering this so critical? Because a company can show massive profits on an income statement, but if it runs out of actual liquid cash during that timing gap, it goes bankrupt. How do experts manage this? By meticulously optimizing the cash conversion cycle, speeding up collections, and strategically timing disbursements. For our deep dive, senior treasurers take this further by designing in-house banks and cross-border cash pooling structures. This prevents money from sitting idle in one country while another subsidiary is forced to borrow at high interest rates. This flowchart visualizes the liquidity battlefield. On the left, you have cash outflows leaving the firm and cash inflows entering the firm. The space between them is the dangerous timing gap. Treasury liquidity management sits right in the middle as the ultimate bridge. From this central node, the treasurer deploys two main strategies, optimizing the cash conversion cycle and executing global cash pooling. Both of these expert domain actions converge on the right to achieve our ultimate goal, reduced external debt and massive cost savings for the enterprise. Our next pillar of domain expertise is financial risk management. What exactly is this? It is the defensive shield of the corporation, protecting hard-earned profit margins from wild swings in foreign exchange, interest rates, and commodity prices. The basics involve ensuring that a sudden currency crash doesn't wipe out the revenue from an entire quarter of international sales. Why is this mandatory? Because operating globally without hedging your FX exposure is literally gambling with the shareholders' money. How do we systematically manage this? Industry leaders use the image methodology, identify the risk, measure its impact using tools like value at risk, account for it properly, govern the execution, and continuously evaluate the strategy. Diving deeper, true domain experts don't just buy simple insurance, they utilize complex derivatives. They combine bought and sold options to create zero-premium structures, effectively capping the company's downside risk for free, while still allowing participation if the market moves favorably. Here we see the continuous cycle of the image risk management framework. It begins at the top by identifying the exposure, then flows into measuring the risk financially. Next, we account and report to ensure compliance. This leads to the govern and execute phase, where the treasurer actively enters the market using forwards, swaps, or options. Finally, we evaluate the performance. Notice the dotted line looping back to the start. Risk management is never a one-time project. It is a continuous, dynamic process responding to ever-changing global markets. Shifting gears, let's look at technical competencies, starting with systems and connectivity. What is this? It is the digital architecture, primarily the Treasury Management System, or TMS, that powers the entire operation. The basics here present a stark reality. Currently, over 70% of corporate treasuries still rely heavily on fragile, manual Excel spreadsheets. Why must we change this? Because manual processes cause latency, and in finance, latency equals risk. We need systems that provide straight-through processing and 100% real-time visibility. How is this achieved technically? By migrating to cloud-native platforms that use APIs and the SWIFT network to bind our internal ERPs directly to our global banking partners. For a technical deep dive, leaders must understand the ISO 20022 XML messaging standard. Using standardized XML formats like the Pain.001 message allows us to send rich, unambiguous data payloads across the globe, forcing multiple different banks to communicate using one universal language. Let's walk through the sequence diagram to see technical competency in action. It starts with the corporate ERP sending raw accounts payable data to the cloud TMS via API. The TMS processes this and generates a standardized ISO 20022 XML payload, sending it securely through the SWIFT network to the global bank. The bank executes the payment and instantly fires back a status report. Finally, the TMS auto-reconciles the company's ledger. This is straight-through processing, secure, instantaneous, and requiring zero human manual data entry. Our next technical competency is the frontier of finance, AI, and predictive analytics. What does this mean for Treasury? It means leveraging machine learning to shift our entire department from looking backward at historical reports to looking forward with predictive foresight. The basics usually start with cash forecasting. By feeding historical ERP data, seasonality, and market trends into an AI engine, we predict our exact cash positions weeks in advance. Why is this a game changer? Because human forecasting is notoriously inaccurate, forcing companies to hoard millions in idle, safety cash. AI destroys that uncertainty, freeing up that cash to pay down debt. How else are we using it? We deploy AI to flag fraudulent payment anomalies in milliseconds and to automatically read complex trade finance documents. But in our deep dive, remember this technical constraint. AI is only as good as its data. You must structure your data rigorously and demand explainable AI. In Treasury, if you cannot explain to an auditor exactly how the algorithm made its decision, you cannot use it. This flow illustrates the AI data pipeline. On the far left, disparate, messy data from ERPs, banks, and markets is ingested. It moves through a data normalization filter. This is a critical technical step. Clean data then enters the central AI or ML engine. The engine outputs high-value intelligence, predictive cash forecasts, and fraud anomaly detection. This intelligence flows directly to the treasurer, empowering immediate strategic action, transforming raw data into measurable financial returns. How do we bring domain expertise and technical competency together? Through synergy, building the 50-50 hybrid team. What does this look like? It means cultivating a workforce where every professional possesses dual fluency in financial strategy and systems architecture. The basics demand that a modern treasurer understand not just how to hedge a currency, but how the API carrying that trade actually works. Why is this mandatory? Because if you have to wait 2 weeks for an external IT department to fix a broken bank feed during a market crash, your company is at severe risk. How do we build these teams? We must institutionalize continuous learning. This involves cross-functional rotations, digital upskilling, and deploying simulation-based training where teams practice crisis management in a virtual environment. Taking a deep dive, leading global capability centers are no longer just hiring accountants. They are hiring data scientists and AI prompt engineers directly into the Treasury Department to build bespoke, agile financial tools. This diagram maps the new organizational DNA within a Treasury Center of Excellence. We are pulling resources from 2 distinct talent pools: finance subject matter experts and tech and data specialists. These 2 streams converge in the middle to forge the hybrid Treasury Pro. This dual-skilled professional is uniquely equipped to output 2 critical deliverables at the bottom: agile system management without relying on external IT, and advanced strategic advisory that drives the CEO's agenda. Let's cement this with a highly practical, real-time use case: automating cash concentration. Here is the scenario. Your global firm has massive amounts of idle cash sitting in European bank accounts earning 0% interest. Simultaneously, your Asian subsidiary is desperate for working capital and borrowing from a local bank at a painful 6%. Your domain expertise dictates the solution. Implement a zero balance account, or ZBA, sweep. You will physically pool the European cash and lend it internally to Asia, wiping out that 6% external debt cost. But how do you execute this without adding manual headcount? You use your technical competency. You program your treasury management system via API to do it for you. Look at the sample JSON code payload on the screen. It is simple logic, rule name, daily sweep, taking funds from the source, euro sub to the target, HQ pool. The trigger is end of day, sweeping any cash above a 50,000 threshold. By combining financial domain strategy with a few lines of API code, you automate a process that saves the company millions in interest overnight. Let's trace this automated sweep via our sequence diagram. The Cloud TMS initiates the process by sending a POST request with our JSON payload to the bank API. The API instantly triggers the end-of-day sweep at the Euro subsidiary. The idle funds are electronically transferred up to the master pool within the TMS. The TMS then seamlessly routes an internal loan down to the Asia subsidiary to cover its deficit. Read the note at the bottom. Because of this automated synergy between finance strategy and technology, the external 6% borrowing cost is entirely eliminated. To summarize, the era of the isolated, spreadsheet-driven treasury is over. True leadership requires mastering both the deep domain of financial risk and the technical architecture of APIs and AI. As we look toward the 2030 vision, corporate treasury is transforming into a digitally native strategic control tower. We are moving away from manual, batch-processed hindsight and stepping into the light of automated, predictive foresight. To survive and thrive, you must execute a relentless action plan of continuous learning. Cross-skill your teams, embrace cloud technologies, and utilize advanced simulation training to prepare for market shocks before they happen. I want to thank you for joining this masterclass on technical competencies and domain expertise. To truly advance your career and master these hybrid skills, I invite you to like this video, subscribe to our channel, and visit quicktechie.com for premium certification prep. There you will find world-class Q&A banks, full ebooks, audiobooks, full-length training, and expert interview guides. Secure your future as a strategic financial leader today. Our final diagram illustrates your career and organizational roadmap. On the left, we leave behind the transactional treasury, trapped in manual processes and hindsight. By applying upskilling and automation, we move to the middle node, a process-efficient treasury powered by TMS and APIs. Finally, by layering in AI and predictive analytics, we reach the golden node on the right, the strategic control tower. Here, you provide pure foresight and drive massive enterprise value. This is your destination. Thank you for watching.